Zambia's Treasury Secretary Felix Nkulukusa confirmed that the country will restructure its $45 million loan with Afreximbank. The loan is commercial, making it eligible for restructuring. The move comes after the Paris Club urged Zambia to restructure its debt to Afreximbank. Fitch recently downgraded Afreximbank's credit rating, citing high credit risks. The restructuring may impact Afreximbank's financials and Zambia's creditworthiness. Negotiations are ongoing to reach a mutually agreeable term. This development highlights Zambia's efforts to manage its debt obligation and stabilize its economy at the same time. Restructuring aims to ease financial strains. From Lusaka, we have Zambia's Zambia, I beg your pardon. We have Caesar Cheelo, an economist, joining us for the conversation. It's great to have you in.
Thanks for having me. It's great to be here.
Yes, and we're coming from a conversation about Afreximbank. Before we get into Zambia, we know that Afreximbank right now, they just had the Fitch downgrade, and they're saying that this is a commercial loan, and so they're able to restructure it. But Afreximbank, they had previously said that the treaty that established it with Ghana and Zambia signed bars countries from restructuring their debt to it. So what is happening here? Can we have a clearer picture of what's happening with Afreximbank and the implications of this restructuring for Africa's Export-Import Bank?
Yeah, sure. I think, first of all, it's not a surprise that Zambia is pushing for restructuring. And there's a seeming slight impasse because on the other side, Afreximbank is an entity that has extended a commercial loan to Zambia. So they feel like their terms and conditions of that loan should not be altered or affected by any default by Zambia. They say they are not a multilateral. But the Zambian side, I think the posture has been very clear during application on the so-called G20 common framework. And even post the common framework, the posture has pretty much been to apply a uniform restructuring across different creditor classes. So whether you're talking about official creditors, Euro bond holders, or other commercial creditors, the multilaterals, some form of debt treatment is required to restructure the debt. And that's, I think, where the basis of the negotiation is coming from the Zambian side.
Right, from the Zambian side. And we know that Zambia was one of the first countries to default on its loan post-COVID. So, I mean, give us a picture of what this restructuring of its $45 million loan with Afreximbank could do for the country's economic stability right now.
I think it's part of a fuller package. Right now, Zambia's debt, public and publicly guaranteed debt, including arrears, sits at somewhere around 28 billion. So the 40 million is certainly not the biggest component of Zambia's debt, but it is an important element because in the whole debt restructuring negotiation, with the different creditor classes, there's this issue about comparability of treatment. So everybody's debt being treated in comparable terms. So if certain pockets of your creditors, such as the Eurobond holders, are getting haircuts, so incurring losses on the interest payments, the expectation is that every other commercial creditor will get similar, but not exactly the same haircuts. And this is where the contention lies because Afreximbank feels that if it goes down this slippery slope of debt restructuring and getting haircuts, already they are not in firm standing in terms of the performance of their loans. So it would mean more losses and further downgrades, which would make their borrowing from wherever they get their capital, their credit from, a lot higher. And I think that's the downside risk that Afreximbank is trying to mitigate. But for Zambia, certainly it's huge for earning a lot more fiscal space, for earning economic stability, for giving the country its space and the chance to live to fight another day in terms of a more stable debt profile that will yield higher repayments in terms of debt service further down the road in the long term.
Right. And I guess it does benefit the Zambian economy, perhaps not Afreximbank as much. As you have pointed out, this is just a step in a longer road of debt to be restructured. The largest creditor, that's China's Export-Import Bank, $4.1 billion. But we would like to get a picture of the Zambian economy. Obviously, there have been some positives, right, when it comes to growth, GDP growth. They outperformed IMF projections. So give us a picture of some of the stimulants in the Zambian economy right now that could drive productivity and perhaps improve revenue and their ability to pay off this debt long term.
Sure. I think one of the biggest drivers of the Zambian economy is mining, and particularly copper mining. And in the recent past, I think copper prices have improved, and that helps with bringing in foreign exchange for the Zambian economy, which also helps the balance of payments and indirectly then helps the fiscal position. Zambia has been able to accumulate more foreign reserves under this environment. We are coming out of the drought year 2024, 2025, 2023, 2024. But in 2024, 2025, we're getting a bumper harvest, which is actually the biggest harvest in recent times. And one of the fundamentals in the Zambian economy is heightening inflation. And it comes mainly from food prices going up. With our bumper harvest on the agricultural side and our staple food maize likely to be in high supply, then we expect stable prices, meaning that our macro fundamentals on the exchange rate, on the inflation, will be fairly good. Along with that, the debt stability will buy us fiscal space that can afford public investments. The government has been recently quite ambitious in its developmental programs, such as Constituency Development Fund, Cash for Work during the drought, farmer input support programs that have also helped with this bumper harvest that we're seeing now. All those things culminate in larger growth ultimately, and that growth, a part of which is then dedicated to domestic revenue mobilization or resource mobilization, including taxes, that a portion of which then go to debt servicing in a more stable environment.
Right.
So it's a long story, but there's a lot going on that's positive for Zambia right now.
Yes, there's a lot going on that's positive. And to balance it, we know that they do need a lot of FX. A lot of the debt is in foreign currency. And with the larger trade tensions, fragmentations, reorganization of trade, how is this in any way shaping the Zambian market, especially because they need as much FX as they can?
I think the biggest challenge for Zambia is that we are mono-export dependent. So we are very dependent on copper. And if anything happens in the copper space, which is a global phenomenon, right? Meaning that you cannot control copper prices because they are set globally. If anything happens in that space, then it has a strong knock-on effect for Zambia. When prices are bullish, as has been in the recent past, then Zambia benefits significantly. But when prices start to falter on the international scene, then you see the knock-on effect, the adverse effect coming in very quickly in terms of a constraint on foreign currency, and therefore the exchange rate starting to depreciate significantly. And being an import-dependent country, the depreciation really results in costly imports and passes through into heightened inflation or prices rising domestically. So we are vulnerable, and that is probably the more precarious thing. And we need to intensify our longer-term strategies for diversification, agricultural commodities, services, and other elements that can bring in foreign exchange and avoid the dependency on copper only.
Right, indeed. There's a lot of economic engineering that needs to go into this planning. But sticking with the restructuring of its debt with Afreximbank, how do you see this impacting the country, Zambia's relationship with other creditors going forward?
I think there's two sides to this. On the one side, the positive is that other creditors, investors, and so on, if they can see the seriousness, if they can see the steadfastness, then they are more assured that Zambia is open for business. Zambia is serious about macroeconomic fixing and debt restructuring and getting a more stable and sustainable debt profile. This helps investors to make the right decisions. In April, I think there was an upgrade from Moody's of the Zambian economy in terms of credit rating. At least the outlook, it's changed from stable to positive. So investors are watching, creditors are watching, and for them, they see this as building up towards a more stable economic environment that people can invest in. The downside risk, of course, is that with all this restructuring and negotiation, particularly when it gets protracted or contentious, is that the premium then becomes higher. And Zambia's terms for getting credit from international lenders, those terms become a little bit less favorable for the country. And that those credit conditions, in my view, are the bigger near-term risk to this restructuring.
Mm-hmm. All right, there's a lot to go into consideration there. But finally, next year is an election year for Zambia, and as is typical with election year, we see more spending to attract more, in projects to attract, more votes. How do you see this impacting Zambia's debt situation, increased spending?
I think the pressures will be there, but to the credit of the team at the Ministry of Finance and at the central bank, I think they have held fort so far. They have held fast and have tried to rein in spending. If you look at our domestic debt profile and the appetite for lending in terms of government paper, government instruments like Treasury bills and bonds, there's been a lot of fiscal discipline. Whether this will hold getting into the election is another question that is very difficult to predict. On the external side, with the IMF as a program, I think so far Zambia has cleared 4 reviews under the IMF program. It's undergoing a current 5th review. It's not clear what the outcome or the result of that will be. But should it come out positively, then it's a positive sign that the authorities are able to rein in that fiscal discipline that is needed to draw the balance between spending for development and essentially to create a favorable environment for the current administration in power, drawing that balance with conservativeness in terms of spending and borrowing and things like this. So without a crystal ball, it's very difficult to predict, but certainly the pressures will be there.
All right, thank you very much. Caesar Cheelo, economist, joining us from Lusaka, Zambia. It's been a pleasure getting your perspective on the conversation.
Thanks so much, and thanks for having me again.
Yes, some other time. We know that several African countries are clawing their way out of a potential debt crisis, so we'll continue to monitor all that and more. That is it on today's edition of Business Edge. Follow us on social media. We are at News Central TV. Head to our website, www.newscentral.africa, and download our mobile app on Play Store and App Store. Till next time, I am Joanna Mustafa.